What is actual cash value, ACV? Actual cash value is a property valuation method that equals replacement cost minus depreciation, representing what property is worth today after accounting for wear and tear. What is actual cash value? Actual cash value, ACV, is a method of valuing insured property that accounts for depreciation. It represents the fair market value of property at the time of loss, what a willing buyer would pay a willing seller. Actual cash value, ACV, is a replacement cost minus depreciation. Example calculation. Factor amount, replacement cost, $1,000, new roof. Age of roof, 10 years. Expected life, 20 years. Depreciation, 50%. $500. ACV settlement, $500. ACV versus replacement cost feature ACV. Replacement cost pays depreciated value full new cost. Premium, lower, higher. Out of pocket, may need more to replace. Covered in full. Best for older items, newer property. Where ACV applies: HO2 policies, personal property usually ACV, auto insurance, total loss settlements, older roofs. Many policies shift to ACV after 10 to 15 years. Depreciation factors: factor, impact, age, older more depreciation. Condition, wear and tear reduce value. Obsolescence, outdated features reduce value. Useful life, total expected lifespan. Exam alert: ACV settlements may leave policyholders short of funds to replace property. This is a key disadvantage compared to replacement cost coverage. Exam tip: ACV equals replacement cost minus depreciation. Pays less than replacement cost. Common on HO2 policies.